live streaming and live streaming. All right. Welcome back. Today's date. Today is April 14th.
April 14th.
Day before tax day.
Cool.
Semi-tax day, right?
All right. Welcome to another Raw Take for our CEOs. This month is around, we're talking startups. And last week we talked a little bit about partnerships, co-founders, management teams. And this week is kind of parlaying away from sort of the, maybe some of the touchy-feely emotional 1 + 1 = 10 to, hey, how do you dock things up, right? How do you manage your legal documents? Things like corporate governance, 409As, and let's face it, like most startups, it's like the last thing they think about. So
yeah, I think to your point
for today,
people spend a lot less time thinking about that than they do about less time thinking about how to document things than they do about who's around the table. Somewhat appropriately so. Obviously, it really matters. We talked a lot about it last week of finding co-founders, business partners. But if you don't create structure around that, you are likely going to shoot yourself in the foot, whether it's in a month, 3 months, or 6 years. It's important to make sure that everybody's around the table knows what's going on, and
usually that kind of comes to bite you in the ass is when you do bring in that institutional investor or a strategic investor. Not the investor who puts in 25, 50,000 friends and family, but as they start stroking checks to the tune of $500,000, you start getting more sophisticated investors. And so it's important to, as you're building out your partners, you're looking at you're kind of taking a look at who's out there. And so today we have a good friend of ours, Bryce DelGrande from Shoobx. Shoobx is can't call them a startup because they've been around for more than half a dozen years. But they're in the startup ecosystem, and they're
great platform.
Yeah, great platform. Do you want to talk a little bit about their platform and kind of some of the experiences we've had?
Yeah, I mean, short answer is the easy kind of entry point for them and their kind of go-to market is that they help you manage equity management, cap table management, and that really is kind of central to corporate governance. And I think what the beauty of it is, whether it's Shoobx or Carta, they are kind of taking something that used to cost a lot of money and are making it more of a subscription-based.
And you had to literally manhandle, right? All those legal documents. You had to lean on the lawyers, the founders, a lot of tribal knowledge, kind of piecing things together. These guys kind of come in right at the onset, right? That first safe contract or that first convertible note, they're right there. So we'll bring Bryce on shortly. And other things we're talking about this month around startups, customer success. That's a big one, right? Startups, you get your product market fit, you got your product development, and now you're starting to acquire customers. You've got 1, 2 anchor customers. Before you know it, you're on to 24 customers, and you're like, holy shit, I can't handle this. My salespeople can't handle it, never mind my engineers or the founders. So customer success is something that many new companies, not that we're a new company, but we really came to that realization late last year that customer success has to be a pillar in our corporate function.
And that typically, I mean, what we see in our customers ourselves, Jeff, who's going to talk about that with us later this month, you really see that when you do have that product market fit and you are growing, whether it's exponentially or at least growing, over year, like on a serious clip, and you have that pain point, right? Because that's when you can't have customer success live within the other functions. But I think even before you get there, like next week, we're going to talk about R&D tax credits. Why do we focus in on that during the startup month? Is because it's kind of between today and that inflection point is when there's a lot of execution risk in there, but it's really you're spending money to build the product, to find out what that product market fit looks like. You're doing experimentation, all that R&D. There's not easy, but there are great ways to capture value in that for startups that you can't if you're an ongoing business.
Right, not just value, cold hard cash. especially for startups that have been around for less than 5 years. You qualify, you can actually take some of those, not as income tax credits, but actually through your payroll. So, and then of course, that whole industry is probably kind of feeling some ambiguity, right? I think it was last week or 2 weeks ago, the tax courts came back and ruled against some of the sort of pervasive approaches, a little bit like a little overstretching,
overreaching. Yeah, there's some firms that just kind of go a little often go a little too far and stretch the bounds, and the rubber band might have broken somewhat, or at least stretched beyond its going back to where it was normally.
Yeah, and so before we get on to Shoobx and bring on Bryce, let's talk about something that is actually starting to really impact companies, and that's hiring. And there's a sense that once everybody got vaxxed, everybody's ready to get back into the office, ready to get back into the factories, start getting back into those trucks, start delivering goods again, and that's not really happening. There is a deep freeze in the employment market, and it is scary.
Yeah, it's really. I'm sure we'll hear more news, more talk about it, but I think it's two factors or two things that you were seeing. One is people's lack of motivation, lack of desire, lack of ability to think about coming back to an office, back to a place where you're working in the same physical space as other people. That's number one, right?
And we can talk about the root cause of that, which is like this anxiety that is pervasive through society right now. I mean, we're having conversations with potential candidates, and essentially if it's not a fully remote job, I don't want it. Now I'm here scratching my head like, so what are you doing to like live? How are you earning a living? And I'm a little flabbergasted.
Yeah,
to put it straight up.
So I think that's one, and then two is just that there's more competition right now for the workforce, and there should be theoretically lots of people out there looking for jobs.
The unemployment is over 6%,
but
there should be a lot of people looking for jobs.
But what are we seeing out there? I mean, in ourselves, our customers, it's hard to get people to sign on the dotted line.
Yeah, whether you're a factory worker, an installer, or a hammer swinger, or
Wall Street Journal today was about truck drivers. Yeah.
Like it is, or even here where we're looking for financial analysts, we're looking for corporate function-oriented folks, and we're open to entry level and further along in careers, and it is getting more and more difficult to find qualified employees, candidates. They're actually, it feels like they're looking for a job, but it's that anxiety of coming back to the office. And I feel for the younger generation, those coming right out of college, that it is very difficult to hire a college grad and onboard that employee, train, develop that employee for a job function 100% remote.
It's hard.
If it's hard for us,
and it's not
90% of the companies that are out there, it's impossible.
It's not about technology. It's not about connectivity. Assuming all those things are in place, it's about helping them understand who you are, what you do, how you do it, and then making sure they get it done.
Yeah. It's funny because 6 months ago, it was sort of like, I'm not saying it was like putting the brakes on a lot of our customers, but there was risk. There was balance sheet risk. There was cash risk, brink of insolvency. I mean, granted, the PPP loan helped. And I was a little cautious. I was like, you might want to not put the brakes, but you might want to like delay certain things. Today, it's like, no, you got to be out there hiring. You got to be out there hiring. Like if you don't have on LinkedIn, like we're always hiring, or whatever that tagline is that everyone's putting on, like the hiring has to be like the number one function, because the business is coming back. Backlogs are increasing. You look at sales pipelines. If you look at ours, it's growing. It's looking good. But if you're not keeping ahead of it, like we always say, you got to build a factory, right? You got to build a factory before the customers come on board. But how the hell you build a factory when you can't get goods and people? So
yeah,
something to watch over the next 6 months.
yeah. No, I think it'll be something we hear more about.
And when you think about risks and opportunities to your annual operating plan, I got to tell you, like the big opportunity is businesses coming back. The biggest risk is I don't think you're going to be able to. You're going to have to like right size your expectations, not because of customer demand, but because of employment. So
yeah,
that's my 2 cents on that.
Yeah, I think we're going to see people paying more for what they used to get for a little less 18 months ago.
Yeah.
So.
Next.
There was some other news. I mean, you were talking last week about Bitcoin, Coinbase. You know that's continued to be in the news. Just and I think we'll see a lot more activity.
Yeah, I'm excited to see Coinbase file for IPO or maybe they're not filing, but going into the public markets. I believe it's today. They are actually valued right now. This is before going public. They're valued at like 3 times what NASDAQ is valued at. And that's exciting. Now, granted, there's a high correlation between, I'm sure there's a high correlation between the value of Coinbase and that of the direction of cryptocurrency, Bitcoin. But an exciting moment in cryptocurrency. They are the largest wallet exchange for the layman, unless you're like totally crazy fanatic privacy cryptocurrency trader. You're probably on other platforms, but this is a platform that the layman uses, right? And I think it's going to be a successful IPO. But obviously, we've seen these sort of big market changes. It takes me back to the days of 2000. So I'll leave it at that. So, anyways, we should bring.
Yeah, let's jump in with Bryce.
Friend Bryce.
Bryce DelGrande from Shoobx. We'll bring him in, make an intro. Great guy, and we will be focusing on that early stage of the startup experience. All right. Hey, Bryce.
Hey, Bryce. Hey. How are y'all?
How are you?
Dandy.
We were just introducing you, but before that, we were talking about everything from the challenge of hiring to Coinbase and cryptocurrency and all the news that's happening right now. So we keep it very, very focused.
Yeah, and Bryce, it's like if you don't have the "we're always hiring" sort of motto on your LinkedIn profile, like you're probably doing a disjustice to your company, right?
I mean, hey, hiring and advertising are both the same game. It's getting your name out there and hoping people show up at your doorstep.
Yeah, and you've been like actively growing your team for the last 6 months, right?
Yeah, we've been in a good position. It's tough. Like the pandemic is definitely a tough situation for everyone. It's particularly tough to work with a large number of startups across a number of industries. Like funding has went bananas across many industries, which means that we're super busy, but it does mean that certain segments of our client base or certain segments of our prospect list have had some really tough times. So, on one hand, super excited, super fortunate that we've been doing so well. On the other hand, it does suck to look around and see that not everybody's along for the ride.
Yeah. No, I hear you, man. And as the economy is coming back and customer demand is improving, it's not just improving. I mean, you look at the CPI last month. You would think inflation is like creeping up. Obviously, you have to kind of take a look at where you're coming from or where it's coming from. Right, 12 months ago looks a whole lot different. But it's going to be interesting to see the attitude in the change in the needed change in the employment market to keep up with that customer demand. Because whether you're Shoobx, and granted you're probably more tech centric than we are, whether you're Shoobx or GrowthLab or a contractor or a manufacturer, you still need people. And we're seeing like there's this chasm between the haves and have-nots. There's this immense amount of anxiety with potential candidates that they don't want to come back to the office, and that's kind of keeping a lot of our customers awake at night.
Yeah.
It's we've had conversations about it. We've talked to other companies about it. I think the thing that's tough is you want to be considerate of everyone's feelings and you're trying to develop that. But at the same time, it's kind of that optionality that makes it hard to continue to drive culture, right? Like if you have some people who are in person and working together, then that is alienating to the people that aren't. If you have some opposite dynamics where most people are on Zoom and two people are sitting in a room behind some zebra stripes, then that has some weird dynamics too. So I think it's going to be a very tough question for a lot of us trying to figure out what exactly that work looks like. I do think hopefully we'll have a better work-life blended balance while we do that. But yeah, it's definitely not going to be an easy next couple of months.
Yeah, it's funny you bring that up. Steve and I have actually, and we'll jump back to Shoobx for just a second. Steve and I have actually had these conversations where when we have town halls with our team members, we have consciously said the two of us cannot be on Zoom together. Like, even though we're in the office together, we put ourselves in different offices, so that way those team members that are working from their bedroom or in their home office, right, they're not feeling alienated, as if they're looking into, to use Steve's words, it's as if they're looking into our world, and that doesn't feel like that's not the intent of the town hall. So
100%.
Yeah, even right now, like you got you on one end, you got both of us in the same room on the other end, and it probably feels a little different if there was three other people kind of solo on Zoom. That's when it starts to feel a little imbalanced, and we've seen it in some of our meetings and have adjusted accordingly.
Yeah. He's like, I'm ready to go hang out with those guys. How do I get over there?
So this is Startup Month here on the Raw Take for CEOs. And Bryce, we're kind of walking people through the cycle, and kind of our lineup. Last week we were talking about finding co-founder, finding business partner, finding the right fit. Ironically, my list from a video I produced maybe 5 years ago, had an 80% overlap with one of our customers. What they put out just kind of got acquired last couple months ago, and that's the kind of how you get started. Right. We want to continue that get started piece because there's some stuff that you do at the beginning. Corporate governance, it's really not sexy stuff, but stuff that needs to be put into place. And Shoobx does a great job of making sure that you're looking at kind of checking the boxes, or if you haven't checked the box, here's where your holes are, that type of thing, before you get to the place where you're going through the testing, the product development, product build, and then you get to the place where you really need to scale up and you found that product market fit and you need to grow. And then one of the key things there that we see a lot of is the customer experience and customer success. People then kind of pivot. Founders focus on, continue to focus on fundraising, bring somebody else in or repurpose somebody else so that they're focused on that customer experience. But today we want to kind of focus on that piece in the early stage, where you see founders pain points, some of the easy kind of trip up points or some of their major questions. And often it comes down to equity and equity allocation. Hey, I started this business 6 months ago or a year ago. I've got some funding now. I want to bring somebody else on. That person wants to be a co-founder. How do we think about your compensation, your equity, and all of that?
Cool.
So, talking about kind of your experience, what you see out there, why should founders of early stage companies really care about corporate governance? Broad question.
Sounds like the worst and most boring question of all time.
It does, but tell us why it's important. I get a little passionate about this too, but
it's something that's easy to ignore, and it's something that seems like it's as simple as just, hey, we incorporated, we have a charter, our company grows as we try to figure out how to survive tomorrow. It doesn't really matter. The honest truth and the way that I think about corporate governance is it covers kind of a swath of things, right? It's, yeah, sure, your charter, your incorporation documents, the way that you manage your board, your meeting minutes, it's your cap table. It's really all the things that structurally and legally kind of bind together your company. And so all of that stuff matters critically down the road. And it specifically matters a lot at 3 different events: financings, acquisitions, and exits, right? Those are the places in time where someone is actually actively looking through all the documents all the way back to the inception of your company and turning over every stone and trying to make sure everything's, lined up in a row. And that can be a really tough exercise if you haven't cared about this stuff as you go. So when you ask, why should I care about this? I think the easiest way to conceptualize that is to think about kind of some reference points. I think all of us know Snapchat, or at least have heard of it, right? Snap, now affectionately on the public markets. They're kind of the apex mountain awful story of corporate governance gone wrong. So if you haven't heard about what happened pre-IPO, one of the quote unquote co-founders, a guy named Reggie Brown, ended up suing against Snapchat, saying that he created the initial idea for the company. He had the rights to their logo and a couple of other things, which seems petty, seems kind of, Winklevoss, Facebook story, all of these lovely things. In this specific case, the reason that he had grounds is because they never had issued IP assignment agreements and he had never signed them. If you don't know what that is, essentially what it means is, hey, I relinquish everything that I create IP-wise to the company. The company owns the work product. They will own it now. They will own it after I leave. I have no claim to that. Reggie comes back. He sues them. They end up settling out of court for somewhere north of $150 million. Obviously, as investors are trying to put money into your company, one of the things they're going to care about is the potential kind of opportunity or chance that Reggie Brown is going to come back and ask you for money too. Right. And that is something that is constant throughout your life cycle. You talk about all of these issues, and I think most of the newsworthy ones tend to be Reggie Brown at the early stage, but it doesn't get any easier, as the company scales, hits some of the milestones that Stephen was talking about. You get to 20 employees. When you go to 20 to 50, that typically happens quicker than you went 1 to 20. When you go 50 to 100, it keeps going faster. And the amount of people that are involved in all of these actions, whether it's the equity in the cap table, the board governance, the IP assignment agreements, and offer letters, there's more hands in the pot, right? There's more people who touch each one of those things. And that means it's easier to forget to approve it by the board, or forget to check if they actually sign the offer letter, or put the IP assignment agreement in the wrong folder. And so it's trying to build these healthy habits that create the infrastructure and process to prevent missteps along the way, whether it is at inception, whether it is at Series A, whether it is at Series F, so that way you don't end up with any of these major issues, or at least just avoid having question marks during a financing. Yeah. And that's kind of where Shoobx comes into, right? Trying to do is make it easy for people to grow a business and make it easy for you to take the actions that you're already taking, but handling all of the kind of compliance check mark of did you do this, as well as the organization of it, so that way financing rounds, exits, IPOs, whatever it might be, happen quicker and happen with less pain.
So Shoobx is like your chief cat herder.
Yeah, pretty much. I sometimes I have 2 young. We watched Cinderella recently, and it's like the magical broom. We're the magic broom. We're just following behind you, and you go and have fun, and we'll take care of it.
That's a great thing. No, I think you're right. And when you get to that 20 people, 50 people, usually there's more money around the table. You're probably going through that first or second round, and when there's more money to spend on lawyers, on corporate governance. You've got it cleaned up by that point, because you have gone through that due diligence at least once. I think the first place that we often see customers pay attention to this, because the risk for the investor is a lot different than the risk for the founder, right? The founder's risk is this goes nowhere, right? And if it goes nowhere, it doesn't matter if you have corporate governance in place or not. If exactly. It goes nowhere, you got a lot of different risks. But we find that we kind of come to or customers come to us when they don't have corporate governance rightly in place, is when they're looking for that first 409A, when they're getting to the point where they're hiring their first employees, second employees, they
Yep.
want to offer options, and they need a 409A to be able to offer those options. Or they've done a 409A and they did it wrong, and they're coming to us to help get things right. I think one of the beautiful things is that, that has often been a hurdle. And over the last 2-3 years, Shoobx, other equity management platforms have started to kind of commoditize the 409A. It's really a compliance document, right? We used to do a lot more of them kind of separately. Now we're doing more in conjunction with equity management platforms, because Shoobx includes a 409A as part of your subscription, because it is so key, and it's key to get that correct. But we found that as kind of the entry point for us to help customers get their corporate governance in line. And sometimes that's a project, depending on how kind of screwed up their history is, or complex, I should say, their history is. It's a process that can take 6 months and $10,000 to actually get them through the process, kind of clean things up and work with lawyers, others, to make sure it's all kind of put back in place. But that 409A, is a place that kind of in your go-to-market, it's a great pain point that you can kind of catch people's attention, because at that point they do need to communicate their corporate governance, their structure, their cap table, in a way that somebody else can take it, boil it down, and give back a deliverable to the board that they can actually adopt as the evaluation of their options. And as simple as that sounds, there's a lot that goes around that, right? Because at that point you are trying to take a person out of the market, hire them, put them in a job, give them some base compensation, give them some performance-based cash, and an option grant, right? So I wanted to kind of talk amongst the three of us what we've seen, what we advise customers when they are looking to bring people on that are maybe not co-founders, but how do they allocate that equity? What are the conversations that we've seen out there? Because people listening, founders, it's one thing to bring a co-founder in; it's another to bring the CTO in that's coming in 2 years after. And how do you build their compensation package? Because equity is your most precious resource, it's your most expensive resource, but too often it's just easy to say, I'll give you 2%, 10%, whatever the number of shares looks like. How do you kind of Dan and Bryce, converse with customers when they are talking about granting equity and options to early employees?
Yeah. So from my perspective, when it comes to the cap table in general, right, all of this stuff is relationships. We have benchmarks, we have frameworks, we look at what the market says and what people have done recently and what theoretically things should be worth. But at the end of the day, when you think about what you're giving away to an investor or to an early employee, both parties need to agree that whatever is being exchanged is fair value to them and to the other party, right? It's coming up with a compromise of saying, hey, Stephen, I feel like your contribution is worth 10% of my business. Are you willing to accept that as your contribution is worth? Similar for investors, similar for anything else. So I think at its core, it comes from that place. And I think there's a couple of things there that you need to be able to communicate, right? When I went through startups the first time around, I was the second hire. All I knew about early stage compensation and equity was equity is good, options are something you buy, and if this company does well, I make money, I think. Mm-hmm. Right. And what I think most founders, most founding teams, most even late stage companies should be doing a better job communicating what those things actually mean. Yes, equity is good. We give it to you because it is a way for you to participate in our upside. In order to participate in our upside, you must purchase these options. These are the conditions under which your options will vest, and you can purchase them. And if you do purchase them, you will purchase them at this price, which, to your point, Stephen, is related to the 409A value. And this is potentially what it could look like down the road, because this is how much money or how much of the company it is worth today. And that honest conversation, I don't feel like happens enough, especially with folks who are joining who haven't done this before and, like me, didn't actually know the calculus that came behind those things. Fortunately, I'm a lot smarter now than I was then, or at least I like to think so. So hopefully I have a better sense of what I got myself into.
Yeah, I think often it's that I agree with you. That is not spoken about a lot, but partly and mostly it's because those founders don't have a clue about advising their employees on what they should be thinking about when it comes to how to put a value on this, and even when to exercise. So if you're talking to, if you were founding your own business, what would be your advice to the first person that you granted options to?
Yeah. So I think the way I think about it more is like, how would I handle this? What would I do? So I think the first thing that I would say to myself, and the first thing that I would say to others, is one, make sure that I'm granting equity quickly. So, right, I'm bringing on Dan. I want to make sure I get that grant out the door, and I want to do that timely because I don't want to end up in a situation where I'm excited and about to get a term sheet and suddenly realize that I need to issue options and get a 409A valuation before that term sheet's in my hand and makes that valuation go through the roof. Right. So that's kind of one on timing. I think two is this concept of early exercise. So I think not enough people are familiar, especially on the East Coast, with what early exercise is. But I think it's a really simple way for companies to continue to promote and benefit their employees around kind of equity and upside without really costing them much. The ability to early exercise essentially says, great, upon the grant, you can purchase these at any point, regardless of whether they're vested or not. And then they'll vest more similar to restricted stock. So great, I purchased my 10,000 shares over the next 4 years. They'll vest. If I leave before them, then the company will repurchase the shares from me. The upside to it on employee side is the holding period for the equity counts as soon as you've purchased it. And so the long-term tax benefits are much higher because you can own them for longer. The downside or the hurdle, I think, typically to companies outside of awareness is not only they have to deal with repurchases instead of forfeitures. And prior to there being a platform like Shoobx, it's a very manual process, right? You need to know exactly when it started vesting. You have to know exactly when someone left, and then you have to calculate what should still be there, what needs to be bought back, and how much to buy it back. The thing that I've always thought is really cool about what we're doing is we're really bringing these kind of different operational pieces together in one centralized platform. So not only do we have the front end of, hey, we brought on Dan, we offered him equity, we're tracking that promised equity through the platform, making it easy to grant, making it easy to get the 409A, making it easy to get the board approval, all through the platform. Yeah. And then on the flip side, when Dan walks away, hopefully to a great opportunity, because I believe he'd hopefully do a great job, maybe, we actually will be able to capture that date, do the calculations, and then help that repurchase automatically. So that kind of reduces the barrier being able to do that at scale, and I think has massive upside for your employees.
So I just came across a customer, been with us for probably 5-6 months. And over the last 2 months, we've gotten deeper into this business modeling, the corporate governance. And they're like, oh yeah, we haven't really had a lawyer. And I said, so you mean you've gotten to this point with, I think, almost $500,000 or $750,000 in safe notes without a lawyer? And I said, well, what are you using? They said Shoobx. That was his response. And I'd like to get your reaction, right? Because I was a little taken back. I was like, well, we love Shoobx, but how did you get to this point in Shoobx without a lawyer?
So
learn a little bit more about
Shoobx. It is a slight exaggeration. I think probably what they meant to say was without using our lawyer that much for things that we didn't need them for. The approach that we take to lawyers, and I think regardless of whether you're on Shoobx or not, is to think of a lawyer like a doctor, right? want a doctor to be there, to be able to give advice, to be able to make assessments, to be able to help you with various different health concerns. But ultimately, you want to bucket into two things. You want to have healthy habits, and you want to be able to stay healthy and be able to handle, minor nicks and bruises and scrapes and everyday things. And then you want to be able to access them where they're super valuable and it's super important. Emergency room, specialist, all of those lovely things. None of those are super wonderful and exciting and happy. So we'll go with also like birth and great things that happen. But lawyers essentially should be the same way, right? There's a lot of things that are happening in early stage companies, it's especially pre-financing, around their pre-seed, post-seed, and then also in larger companies on that day-to-day basis. Do you need a lawyer that's there to do a control F for a bunch of grant documents or a board consent? Probably not. But the way the system has been up until this point is there's either lawyer doing this all and hopefully doing it correctly to the T, or there's founder takes something in a template, sticks it in Word, changes a bunch of stuff, and maybe it probably definitely needs to be cleaned up later. So what we're doing is we're kind of enabling more of a almost telehealth relationship, right? Like pulling your lawyer where it's valuable. Don't need them on the everyday basis where you to say, hey, can you take a look at this? Hey, can you give me feedback? A financing, a complex advisor agreement. Shoobx can help you have that conversation by developing kind of the first draft of it on your end with the key terms that and then getting them to weigh in on more of the nuance. That's really what we're trying to help facilitate. And that's where we're seeing immense value, at least on the legal side of the equation, because the lawyers didn't go to law school and Harvard Law and all of these other places to sit there and spend time on board consents for Series seed companies. No, where they want to spend their time is up with companies who are doing big things and where it does make sense and they're leveraging all the knowledge and experience that they have, or the super insightful places that they can have value and advisory capacity in the early stage. So we want to free them up to use those moments and use your legal dollars where it matters and use their time where it matters.
Yeah, I want to learn a little bit more about the customer journey with Shoobx. But before we do that, do you consider the startup your customer or the lawyer? Because if what I just heard from you is like, hey, Mr. and Mrs. Lawyer, I can actually make you more efficient. You don't need a paralegal. You don't need to be doing control F. You don't need to be copying, save as multiple documents. Like we can improve the efficiency of your back office. Who's your customer? I mean,
yeah. So the company is our primary customer. Recently, we've actually launched a product for investors and VC firms as well. But those are the people who are actually our clients. And then we think about it as an ecosystem, right? So there's stakeholders across the board. You have your investors, your employees, your advisors, your fractional CFO firm, your lawyer, accountants, and all of these different people that are interacting with you. So any place that Shoobx can add value because of the data and information that we can make it easy for you to organize, store, and create, we want to make it easy for those people to interact and provide them value as well. So the lawyer is a stakeholder in our client, which is the company, but that extends to the rest of their universe as well.
Cool. So I'm walking one, speaking of customer journey, right? I'm walking one customer right now through Shoobx, and it'll inform us a lot of the journey that customers go through. But where what you just said, Bryce, was one of the things was organized, right? And that is a huge value to startups. It goes back to the beginning of our conversation, how boring corporate governance can be, but how critical it can be, and you don't want to spend a whole lot of money on that. And platforms like Shoobx are a great way to not spend a lot of money on that, but spend some money on it and spend some time on it so that you can leverage what your platform does as you're onboarding a customer, right? You go through that process. A lot of it focuses around the cap table because that is a document that captures who are the investors, who are the founders, who owns options. Oh, you've got options. I need this document, that document, the other thing, right? Walk us through the customer kind of journey, but I just wanted to let her
Yeah, because you don't need to be paying a lawyer $700 to be organizing your documents.
No, you shouldn't. And the worst case scenario before I dive into the journey is what happens is you're not just paying them $700, $1,200, whatever your legal fee is an hour, but you're doing it during a financing. The kind of vicious circle that we see is, yes, the first time you raise financing is the first time that somebody looks at this stuff and cares, and you have to get it cleaned up. But the terrible part is you finish that first round of financing and then suddenly you stop caring about it again. Why? Because you're scaling super quickly and this is just arbitrage. You're going to go back to your existing processes. You're going to start losing IP assignment agreements again. And then you're going to go raise your A or your B. And then we're going to go through this activity all over again. So really what we're trying to do, and what I think we've done a really successful job of, is when companies come onto the platform, great. We want to get you functional and operational as quickly as possible. So that way you can start generating the agreements, you can start capturing agreements and make sure that that gets organized as you go. Kind of that plot by plot we were talking about earlier with Dan of getting hired, of granting equity, of repurchase or financing or whatever those actions are, getting them into the data room and having that Cinderella broom cleaning up before you. And then while that's going on and you're moving through the process moving forward so that way you don't lose these things, we can also use some of Shoobx's reporting to identify what is missing from the past. Do you have all of your employees agreements? Do you have all of your consulting agreements? Do you have any missing board consents? What hasn't been signed? All of those different aspects, so that way we can start going through that. And when you do come into a raise, you're not ending up in a situation where it's, hey, thanks for the term sheet, VC firm X. We appreciate it. We'd love to move forward. Great. Go talk to our attorneys. The attorneys come back and give you the list, the lovely list of all the things that they're going to need. And you say, great. Here's our Google Drive, or here's our Dropbox. And then you just go through iteration and iteration and iteration. Then the Shoobx lifecycle, here's our Shoobx. Let me invite you. Enable diligence mode, so that way I can see what you're looking at, protect my documents with a watermark, and then actually move through this process in a way that I have peace of mind that everything is where it's supposed to be. And that enables us to move through quicker. Companies on Shoobx are closing their rounds faster from term sheet to close because you're not hitting agreement X, Y, and Z, where suddenly you have to hit up your lawyer to go figure out what to do about it. And they have to run the solution by, your investor's lawyer and create also that friction between your investor relationship and all of these other things. We want to say, get back to building the business quicker, get that money from the fundraise in your bank account quicker, and let's not worry about the operational pieces that you have to worry about, especially when technology can take care of it.
Beautiful. And so your customers are closing deals quicker when they've been onboarded on your systems from day one.
Yeah, or from day whatever, right? Where they're at any stage. We've had companies, we have companies come in at corporation on literal day zero, and we have companies come in somewhere along the way. We've had companies like Select get acquired by Nike and leverage our data room for the diligence for the acquisition. We've had companies like Page.ai leverage the data room for their $125 million Series C from Johnson & Johnson. We can help you down the road too, but we'll be with you at any step in the journey where you'll find value in what we're doing. And I firmly believe that's every step.
Cool. So one last question we have. What are next steps for Shoobx? Obviously, customer acquisition is a big one, building out the team, but where do you see your journey and your product development? What's the next problem you're solving for?
World domination.
Good. Cool. On that note.
No, I think what our goal is in general is the perspective that we've taken is, to your point, the company is our client, and founding a company is hard, and being an employee at a startup is hard. And there's lots of aspects that are unnecessarily complicated, are unnecessarily costly, either in time or actual financial resources. And we want to continue to double down on ways to make those processes easier, make them more seamless, and move them forward. So like one of the things that we've been working towards for a while and been able to do is actually automate financings. We've done, 100 million of safes and convertible notes generated on the system, more than that over the last years. But we've actually moved to be able to automate financings like a Series A or a Series B using National Venture Capital Association documents or the Series C documents. And it's really interesting to see something that's, hundreds of pages be facilitated by technology and expand upon the value proposition of saving the time during the round and getting it closed quicker, but also seeing it reduce the costs around something that should be very transactional, but rarely is.
Nice.
Yes.
Cool.
That's awesome.
Any last thoughts, guys?
No, I appreciate it, Bryce. Thanks for joining us.
Pleasure.
Startup month here on the Raw Take for CEOs.
Yeah,
Thank you for having me.
Appreciate the friendship and part of the ecosystem. Always enjoy our networking events. We miss Robert Hughes today.
The hair.
I was just about to say there was a lot of hair missing right now.
Gotta keep it short.
Cool.
All right, my friend. Appreciate it.
Hang on 2 seconds.
All right.
We'll just close this out and be right with you. Cool.
That was good, guys. That was fun.
All right.
Can you stop?